I gotta say, I really like that song. Pretty nice. Um, check out a couple of things here. All right, let's get the mask on. And when I put on the virtual mask, I get all this new confidence. It's like being myself, but not myself at the same time. So kind of an interesting thing that happens. Looking forward to the expansion of that system. Um, it's actually funny because uh, so one of the guys, one of the other devs, he's helping out with the avatar systems, and he's making it so when we open our eyes really wide, that lasers shoot out, just because he's bored, I guess. Uh, I don't know. It's creative, it's fun, and why not, right? Especially when the traders have some cool calls and they'll have their avatars over the charts, they'll be able to stare at the candlestick or whatever it is and fire a laser at it or something like that. That's at least that's the idea. I I stand behind it. I think it's great. All right. Anyways, without further ado, welcome to the Sydney Tokyo overlap. Got SPDas patiently waiting over here, and he's got a fire session. So I'm just gonna go ahead and pass the microphone. Thanks for tuning in. SPDas, the trading floor is yours.
Okay, thank you, Igor. And let me just clear up the chart that we did earlier. This is all too much messy, so let me clear it up. First, we'll do it again. Okay, so welcome again, everyone. We are just beginning the Tokyo Sydney overlap 22, 23, 22, 23rd of Jan. And let's get started as always with the Euro USD daily chart for the first session. Tell you what I can see on the daily chart is something I would like to point out before we go on an hourly chart in a while. Sometimes when you this is just an experience though, just sharing it with you. Sometimes on the lower time frames, if you just keep watching the lower time frames for a while, it gets too noisy and the waves are not clearly seen. And suddenly when you flip on the higher time frame, like a 4 hour or a daily, or sometimes it takes a weekly chart, the noise is suddenly eliminated, and uh, the counts are quite clear. So if you I'm not saying it's happening in the Euro USD chart right now, but I'm just wanting to share an experience which if you are facing it while labeling and getting stuck somewhere, then the only thing we need to do is flip time frames or go to a better higher time frames, like time frame actually. So here what we have is a five-wave rally higher, confirming the trend is up, and couple of years for that three-wave corrective rally, corrective decline. Now, what is interesting, if we notice here, with the we pick up any time frame, the model remains the same: five up, three down, or five down followed by three up, and that's why it's the fractal nature that we call it. The Fibonacci ratios, okay, and one interesting thing that we are noticing now, which has happened since we started following. on 14th of Jan after that low. Okay, now if you notice the first uh, I mean the initial resistance has been just taken out. See that? So if you go by the story of resistance and support, it is something like this. When the bulls are active, they would want to take out resistance, like what they've done right now. And when they do that, they score a point. Okay, this is a wonderful story and a wonderful way to remember what the wave structure looks like or what the wave structure behaves like. So they score a point when a resistance is out, and ideally after scoring a point, they would take a break. That is, for us, it is going to be a three-wave decline. All right, now that decline can actually go to the 61.8% of the entire rally, or it can be shallow. All right, so it falls under the analogy of what we are trying to depict or make out on the hourly chart as well. So now let's find out. All right, this is the hourly chart. Let's do the trend line first. Or maybe the correct way to practice is to label first the waves and then go to the trend lines. If you allow me, the degree is going to be minute. I'm going to put this away, 3, 4, and 5 up there. Then I'm going to flip the degree to minute. And sub-minute. Now, since we know that these are three waves, this is three down and three up. So I'm going to put that wave two down here. And 3, 4, 5. And then we change the structure to sub-minute. All right. So and that's the trend line. Okay, so the wave, the recent wave, we pick up the recent wave and we do the Fibonacci to find out optimal entry for those who are still looking to enter on the long side. Remember, we have already taken longs in euro with the stop loss just below 1.01 there, and a potential target upside. We'll find out the target as well again, but the region where we would we would like a re-entry is somewhere back when it gets to 1.0330. All right, not earlier than that. Also notice that there is a past resistance becoming future support zone here. On the trend line is passing. And also remember the rule that we just saw on the daily chart. Resistance getting taken out right now. So did you notice what we discussed yesterday? I mean, that another 2 more days it will take some time for settling down for a potential wave two. So we still have today and tomorrow. I see a small five-wave movement here. Small five-wave movement here. So it's quite possible that you get a rally, corrective rally, and then 3, 4, and 5 to hit that wave 2 mark before the third wave kind of resumes. This I have seen this structure time and again. Believe it or not, if the third wave is extending here, then we are going to see a very good rally unfolding starting early next week. Early next week because there is still some corrective decline to go before the bulls are back again. All right, and the targets, if you allow me, targets are all 1.06 and uh, 1.07 simultaneously. All right, one after the other. Sorry. Okay, so we'll keep this structure as it is and just pull out wave three up, wave four and five. If we just understand the stories of support and resistances, we are now headed towards 530 at least, or possibly 1.06. All right, that's the story for euro. Nicely poised on the long side with a stop around 1.01. All right. The second major market that we would like to follow is the dollar index, as always. This includes most of the dollar crosses as well. All right, that has been done. We'll pick up from where we left in the last session. We are still looking for a sub-minute wave 2 corrective rally to materialize a bit higher, all right, somewhere around 108, 60, 70. Maybe we'll get another entry to go on the short side if you have missed the bus earlier. Remember, we already sold aggressively on, I think, 14th of January, right from that level, the stop around 110.30, and we've got no intentions to take profits completely because the journey is just looking to begin on the south side. Now, for those who are looking to enter for the first time or re-enter, then we I think we should go we should see prices rally one last time, possibly test that trend line and then reverse. This is what is a high probable or a projected path actually. All right. So first we go down a bit, correct ourselves, and then rally, test the trend line, get resistance. So there are quite a few interesting points here. One is the trend line resistance. Other one is the support turn resistance. Third is the Fibonacci ratio. Fourth is the candlestick pattern. And fifth is, of course, the sub waves that we've plotted here. So the idea is the more tools, not like the indicator tools, but more like the conventional tool that we use or uh, put on the chart, keeping it quite clean though. So you see, we put quite a number of things here, but the chart looks clean. There's no RSI, no indicators, no Bollinger Bands, or no nothing. We just see the waves, and we rely on waves and a couple of more things like trend lines, the Fibonacci ratios, of past support, turn, resistance, and vice versa. And we should be good actually. All right, still we have four parameters in our hand to be able to trade with confidence. All right, so the story in the dollar index remains on the south side with a stop around 110.30. There is a bit of silence right now. We'll pick, I don't know why, but we should be picking activity in the next. We've got 48 hours to reach there, ideally, to pick up from the next week, early next week. Okay. Gold is nearing its resistance now. Let's see what the price action has done. Okay, I'll have to just zoom in a bit. All right, this is where the counts are actually. Have you noticed the pattern? Did you realize what pattern is uh, unfolding here? It normally doesn't happen, but it, I think the metal is unfolding a triangle again. See that sideways and that overlap. So triangle is unfolded into five waves labeled as A, B, C, D, E, and each is subdivided into three waves. So here we have A, B, C, D, and E. I'm going to take this out. I'm also going to flip this wave 4 over here. So we've got A, B, C, D, E. Most probably, if the triangle pattern is unfolding, it should be completed uh, ahead of that low around 27, 49, and we should begin higher from here, like that. There's one more technique. If you want to measure the breakout, you draw a horizontal line of the sideways action, okay, and then just equally draw the breakout, like an isosceles triangle. Is pure mathematics. X is equal to y. That if that is x, uh, y will mostly be equal to x. So making it an isosceles triangle here, two legs are equal. So that comes to 77, 80 already, and some more further push towards 88 is quite possible. So maybe the last leg should materialize ideally in the next few hours. I think by the NY session tomorrow we should be there, or even by around London session. Overall, overall 4 hour chart is quite clear now. We are looking for a 2788 push at least before prices begin to cut loose on the south side. Let me just draw the channel as well. Let's see where the channel is taking us. There are a few tools like trend lines, the channeling, uh, past support, resistance, and vice versa. They really help us get to the bottom of what's going on according to the price action. So if we if we put it there, it is. Let me do it again. Connect A B, so, and then put it through the C wave. Now I'm taking a chance to put it through the first wave. That is 535. So this is the first wave, and then you have three corrective waves, and then the third wave, correct? So I'm putting it through the termination of wave one. Let's zoom in again. Now, do you see that that convergence of 88 and the channeling is coming? Let me remove one of the arrow. It's coming 23rd January, 6 a.m. GMT. All right, so there are a few hours left from where we are trading right now. The convergence is right across that 25th, maybe 10 a.m. GMT. So that around that time, if we are able to touch that or reach that, it's also good in the time perspective. There's a convergence over here. All right, let's keep the channeling here. Let's keep the channel and the waves as it is. And remember, we have done a limit order for gold around 85.90 with a stop 28.01, and the short-term target is here, this arrow 26.90. All right, so let's see one more push higher and then turn lower. Let's see how the story unfolds. It's going to be interesting here. All right. The indices we can pick up the next session, but a quick view. I'm not doing anything. We are not changing anything. Okay, this chart is just a continuation of what we have done in the New York session. Okay. Now I keep saying that trend lines are sensitive. They've got that human touch or a kind of human touch. Keep watching, all right? Keep watching these two trend lines. I mean, that one and the tentative trend line, which we have connected using the two dots here. And what we're doing is flipping the chart to candles for a moment. And let me zoom. Now, that's a 4 hour chart, okay? Maybe you want to see the daily chart as well first. Now, the kind of pattern that we are looking for over here, all right, you got a bullish bar and then you got a kind of spinning top yesterday. Not exactly, but it could be in the bullish category as well. So the pattern left for us, two choices for a bearish pattern are it could be an engulfing bearish or an evening star. So if it is an engulfing bearish today itself, that is Thursday, it will cover down the previous candle completely. And if it is wanting to do an evening star, today would be indecisive, and tomorrow it will cover lower. All right, that's the pattern unfolding because right now we are having an indecisive candle or just beginning to unfold. On the 4 hour chart, if you look at the candlestick pattern, it is quite a bit sideways going on. See, there is the bullish candle, then the indecision, again indecision. So a couple of more indecisions, and we should be good for a daily indecisive candle, and that will set the goal or set the stage for an evening star going forward on Friday. That's tomorrow. So we are not doing anything on this chart. No change at all. Let's keep it as it is and let's see how the story is unfolding. All right. This is what we have projected and let's see how it goes on. Potential right shoulder in place. Let's put a text there as well. Potential right shoulder. Okay. Let's move on to the coins now.
Let's go.
I don't know why, but they're taking their own time. So not much to discuss on the coins. We are still under the same price action where we were proposing. I mean, and price action, it's done nothing in the past few hours actually, just about converging around the same price, 103. Remember that's the triangle view. That which is the triangle view which we did last time. So that's wave E possibly, and should be getting through a breakout soon. Ideally, a push above 107 now is required to confirm that okay, we are going on the northern side again. Stop loss remains around just around the 99 price, and we can still initiate long positions if you want to. But please remember, don't have your stop losses open or below that point. I mean, 89 has gone now. You should be revising your stop loss from 89 to 99 at least. Whether you're already long or you're wanting to initiate longs here, the target should be around the 1110, 109, and 113 at least for now. All right, that was Bitcoin. I'm going to flip the chart to a daily, and we'll have a larger view, all right, in all of the coins. Okay, so Ethereum wave 5, that is wave 5 minor, which is unfolding, and within the minor wave 5, we now have wave 1, 2, 3 up there, wave 4, and the fifth wave is just beginning to unfold. And we've got wave 1, 2, so maybe we've got 3 more waves to go. And I'm going to take that arrow off. So it's still time for Ethereum to carve a new high around the 4,300 mark. Ideally, the stop loss should go around 2,900, and it's actually accumulating right now. Maybe another terminology that you want to use is accumulation. For us, it is a triangle as the pattern identification. So still long, potential longs can be taken with a stop around 29 and target around 4,300. Lana, same structure, no change at all. But the stop loss should go around the 229 mark, and the target is 314 plus. Remember, I was not really uh, confident earlier about a potential fifth wave rally. You see that constantly used to say that Solana might have completed its corrective, so its upside, but you see that low, and it remained above that particular high, which was necessary. So we are still good to have one more leg higher. We've got it already, but maybe one more leg higher remains. So, but don't take it for granted. The target was hit 280 plus. So if you're going long, we need to stay right below that low around 230, just in case if we see a massive reversal suddenly. All right. But still one more hike. The probability remains, especially looking at all other coins. It should be in consolidation as well. No different than what we have seen most other coins, around 3.1 right now. So ideally, if you want to go and buy right now, the stop is going to go around 2.8. That is 3 points of risk, and the target is around 3.7. But please remember, we are just into the fifth wave thrust breakout uh, towards 3.7. Before this curve should ideally turn back, so the projected thing that should happen, because I see that, traders always want risk versus reward, correct? So if you ask me personally, what I see here is if I turn short there, I'm not asking you to do it right now, but if we turn short there, the entire triangle is open for us as a target. So let's say we position ourselves around the 3.7 levels to go short. That's the next step. The wave model gives us a clear path. I keep saying, or it's like a Google map. We go short there. Just stop loss is just about whichever high it prints, and target all the way down towards wave E. That's the first target, soft target, is 2.2, and it can go initial where the triangle started actually, and that price is 1.9. So if you look at the risk reward ratio, uh, trading point of view, that gives us a good risk reward ratio. All right. So we'll keep the both arrows intact, and let's see how the price action unfolds. I think we'll bring the current session to a pause now, and I'll thank you all for joining again. I will be back in a few hours for the London session. For now, I'll flip it to Igor. Thank you, Igor. Back to you.
SPDas, thank you. Always a pleasure.
Thank you. Thanks.
Alrighty, folks. I won't keep you here that long. Thanks for tuning in again. We'll be back for 5 a.m. London session. And always a pleasure to have you. Please do us a favor, hit the like button, repost, and leave a comment, questions, things like that. We can address them on the next session with either SPDas or IT Trader. Looking forward to having you back and for another trading day. Take care.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.